Okay, hey everybody. Good afternoon. Neil here. It's Friday, end of day, and we're going to look at end of week wrap up yet here again. Kind of maybe get a feel as to what we can be looking for next week, also. And so start with a daily chart here of the ES. This is ES futures. I'm doing the futures versus the SPX because I want to look at a volume profile, and I cannot do that on the SPX. And very specifically, what I want to concentrate on is this range of trade that we've been in here that I'm pointing to. It looks like to me, arguably, one could argue that you could consider going all the way back to November the 7th for this same purpose. That would be, I couldn't say no to that. I mean, and the reason being is because from that time, you can see it broke out of a lower distribution and started this new upper distribution at about that time, going up, then down, then back up, then down, and crossing, making some overlap up here at the top. But I'm taking that same concept and I'm saying, like, for instance, okay, well, you could argue there's a little range of trade here at the top, from what is this, December the 4th through about the 17th, etc. And that's how I do this. I call those micro composites. So it's a little snapshot of a range of usually either a couple days or a couple of weeks that trades largely in a range and completes or presents, is complete one day. I don't know when that'll be, but it presents a kind of a range of trade that we give it a name. We call it a microcomposite. So important. I'm starting it on the 17th, and I'm looking at all of this trade that's basically been sideways since then, including today. You can see that's in this range, and this range is 61. I don't know, loosely call it 50 by 59.50, right? So 200 points wide, a lot of overlap in here, big up, big down, big up, big down, back and forth, right? Here's what it looks like. So when I do that, I end up with this profile. And this is, you can see in the upper left-hand corner here, 17th of January through today, including everything that was traded today. And what we end up with here is the point of control for that entire range and region and range of trade that I'm calling a microcomposite. And that's 6088, and that's in the ES futures. So you do the math for the SPX, it's probably something like 68 in the SPX, but it's 88 in the futures. So that is it. That is my opinion. That is our new over-under, line in the sand, going forward into next week, lean long above, short below, etc. But it's also another way that I like to look at this is that is the most heavily traded price in volume in all of that 200-point range over all of that period of time, which is basically a month. So essentially a month in 200 points of range, that is the most traded price and volume in all of that time and range. And so another way to look at that is you can say all roads lead to that until they don't. And so it is I'll consider it the new support resistance going forward into next week. Up is easy. I keep saying the up is easy. If it just comes down here and wants to hold this as support and up, you're targeting 61, 80, whatever I told you last week, or like 82 or something up there. And it is the it is the 6165 SPX level is what it is. And that is the short strike on that JPM March quarterly calendar or collar trade, their collar that they've got on. That's the short strike, and it's a big one. I mean, it's like 50,000 times. You'll see it on the March quarterlies on the SPX options chain. But what I'm doing is I'm doing a roll adjusted target to a new all-time high that happens to coincide with that SPX short strike on their collar. And it is 61, 80. I think I want to call it like 82 82.80 something, 82 in the ES, which is 61.65 in the SPX. So up is easy. That's the target on the up. It gets interesting on a break. That's where it gets interesting. So one of the things we want to know is, well, how quickly could we figure out that, well, it may be breaking, right? And that would be, here's our line in the sand. So very specifically with regard to, and in terms of timing on this, okay, we want to be super careful come end of Wednesday, well, Wednesday of next week, sometime Wednesday of next week. The VIX in front of the Feb OPEX is a big deal, and that is next week. And so we want to say strength up into, is normal, strength up into the middle of the week of the expiration series on monthly expiration, and then be ready, right? It's not like it necessarily gets immediately weak. Sometimes it does, but it's I don't know, it's like a lack of the existence of the persistent strength that carried you to that point starts to set in on that Wednesday, maybe Thursday of next week. And so I want to be really careful midweek next week that if this thing starts to break, then I want to know as quickly as possible. It's my opinion that 6088 level in the ES is going to be what's going to tell us. So that's where I'm going with this whole thing. I'm trying to kind of show you the how, the why, how I'm pointing to that level, where it came from, the whole everything, the reason for the target, if higher, where to be super careful on the uptick into that target. That would be a place to really put your caution cap on at those targets. Their extensions, measured moves, roll adjusted targets. It also happens to coincide with that SPX strike on the on the JPM collar trade. It's a big deal up there. So we want to be careful, and now when to be careful. Now the level that tells you that whoops, it might be slipping, and so that's about the best I feel like I can do. And I'll leave you with that going into next week. Hope it helps. Good trading. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me